Welcome to Solidarity Spotlight, the place where we share with you bleeding-edge stories in blockchain development. I'm your host, Solidarity. Today's landscape features transformative acquisitions, technical breakthroughs, and shifting institutional strategies that collectively paint a vivid picture of blockchain's accelerating integration into global finance. One of the most significant developments involves CoreWeave's monumental $9 billion all-stock acquisition of Core Scientific, a move that not only redefines the infrastructure landscape, but also signals a strategic pivot toward AI and cloud computing convergence. By eliminating over $10 billion in future lease expenses and acquiring 1.3 gigawatts of power capacity, this merger could catalyze further consolidation in the mining sector while freeing capital for next-gen computational projects. The market's immediate reaction: Core Scientific shares fell 14.7%, hints at short-term volatility, but long-term implications include enhanced operational efficiency and potential cross-industry innovation synergies. Simultaneously, Bitcoin's market dynamics reveal intriguing whale behavior as large holders aggressively accumulate near the $109,000 price level, contrasting sharply with retail investors who continue distributing their holdings. This divergence suggests a silent transfer of supply from smaller to institutional hands, potentially foreshadowing reduced market volatility and stronger foundational support for future price surges. Such accumulation patterns historically precede bullish cycles, and with Bitcoin hovering just below its all-time high of $112,000, this activity could amplify upward momentum once macroeconomic conditions align. Meanwhile, technical analysis introduces a critical debate. Linear charts suggest resistance at $115,300, while log-scaled models project a far more ambitious $223,000 ceiling. These divergent viewpoints underscore the tension between short-term trader psychology and long-term institutional growth expectations, with the latter likely gaining traction if Bitcoin sustains its current consolidation phase. Ethereum's ecosystem continues its quiet revolution, marked by Vitalik Buterin's proposal for a 16.7 million gas cap per transaction, a technical intervention aimed at curbing network bloat and enhancing parallel processing efficiency. By preventing single transactions from monopolizing block space, this upgrade could streamline zkVM operations and attract more complex decentralized applications, ultimately strengthening Ethereum's position as a settlement layer. Complementing this development, the surge in Ethereum-based tokenized assets under management to $5 billion illustrates accelerating institutional adoption. Real-world assets like U.S. Treasuries now flow onto the chain, offering tangible yield opportunities that merge traditional finance with DeFi liquidity. This convergence may soon challenge conventional investment vehicles as transparency and 24/7 trading become default expectations. Political dimensions emerged as Elon Musk confirmed his nascent America Party would embrace Bitcoin, citing fiat currency's hopelessness while positioning cryptocurrency as a pillar of monetary decentralization. Though concrete policy details remain scarce, this endorsement could legitimize crypto advocacy in mainstream politics, potentially influencing regulatory frameworks and voter sentiment ahead of U.S. elections. Across the Atlantic, Europe's Blockchain Group and the UK's Smarter Wed Co. expanded their Bitcoin reserves, signaling deepening institutional conviction. Their accumulations, paired with Japan's Metaplanet adding 2,205 BTC to its treasury, reflect a broadening geographic consensus that Bitcoin serves as a strategic reserve asset, a trend that may gradually reduce systemic sell pressure. Tokenization narratives gained further traction as Plume Network integrated with Tron via Skylink, enabling users to access tokenized U.S. treasuries and real-world yields directly within Tron's high-throughput payment ecosystem. This symbiosis between DeFi and real-world assets could unlock sustainable yield strategies for millions in emerging markets, while demonstrating how Layer 1 interoperability accelerates financial inclusion. Conversely, regulatory clarity struck a cautionary note when UAE authorities debunked claims linking Toncoin staking to golden visas, causing Ton's price to dip 6%. This swift correction highlights the market's sensitivity to regulatory narratives and reinforces the need for transparent governance in asset promotion. Looking ahead, July's packed calendar of blockchain events, from ETHCC8 in Paris to Web3 Summit Berlin, will spotlight scalability debates and institutional adoption pathways. Concurrently, scheduled token unlocks worth over $1 billion, including Trump $455 million and Zurich's $187 million, introduce supply-side variables that could test market liquidity. Historically, such events create volatility windows, but growing spot ETF inflows, 1.04 billion last week alone, may buffer potential downward pressure. Notably, Ethereum-focused products attracted $226 million, double Bitcoin's inflow rate, suggesting investor confidence in its real-world asset utility. Market-wide, the crypto sector edged upward despite subdued trading volume, 72.4 billion, with Dogecoin and Celestia leading gains at 5.2% and 11.2% respectively. This resilience amid low volatility implies accumulating institutional positioning rather than speculative retail action. Mercado Bitcoin's plan to tokenize $200 million of real-world assets on the XRP ledger further illustrates how public blockchains are becoming institutional pillars, a trend that could gradually elevate altcoins anchored in practical utility. Finally, Nexus's final testnet launch for its AI-optimized blockchain introduces a radical vision, aggregating global compute resources into a verifiable world supercomputer. While philosophically contentious, prioritizing speed over decentralization, this model could pioneer new use cases where blockchain and AI intersect, from decentralized training to auditable inference. That concludes today's Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.